All right, let's talk Medallion Financial. They just dropped their Q2 2025 numbers, and, well, they were pretty eye-popping. We're going to dig into what's going on under the hood that's making this company tick so well. So let's get right to it.
So, check this out. A 56% surge in profit, year over year. I mean, you don't see numbers like that every day. It really makes you stop and ask, okay, what's really going on here? Is this a one-time thing, or is there a real engine humming? That's exactly what we're here to figure out.
And here's the number that really got Wall Street talking. 46 cents GAAP earnings per share. Now, that alone is solid, but here's the kicker. It blew past analyst estimates by 43%. Let me say that again, 43%. We're not talking about a little beat here. This is a massive outperformance that completely caught the market off guard.
So a number that big doesn't just happen by magic, right? It wasn't just one lucky break. Let's peel back the onion a bit and see the other key numbers that prove this was a really strong performance across the entire business.
Okay, so yeah, that 56% jump in net income is the big headline, no doubt. But look at the building blocks. Net interest income, which is basically the bread and butter profit they make from lending, is up a healthy 7%. And that's because their total loan portfolio grew by 4%, hitting almost $2.5 billion. See, it's not just one flashy number, the whole foundation looks pretty solid.
All right, so we've seen the what, the big, impressive numbers. Now for the fun part, the how and the why. Let's dive into Medallion's loan book and see what's actually powering this growth engine.
So if you look at where Medallion makes its money, it's mostly in two big buckets. The biggest one, at 62%, is recreation loans. Think RVs, boats, that kind of fun stuff. Then you've got home improvement loans making up another big chunk. That's their core business, their bread and butter. But there's something else brewing, something new that's really starting to shake things up. And here it is. This is the new growth story. Look at these numbers from their strategic partners. It went from about $24 million a year ago to almost $170 million this quarter. I mean, that is just explosive growth. It's a total game changer. So you're probably asking, what is this program and how does it even work?
Okay, the model is actually pretty genius in its simplicity. Here's how it goes. A partner sends them a loan. Medallion funds it and immediately collects a fee. Then, for just a few days, like 5 days on average, they hold on to that loan and earn some really nice interest on it. Then, boom, the partner buys the loan back. It's like a rapid-fire fee-generating machine that gives them a nice income boost without holding on to the long-term risk. Super smart.
But wait, there's more. Beyond all the consumer stuff, they have this kind of hidden engine in their commercial segment. This quarter alone, it kicked in $3.3 million just from equity gains. And if you look back over the last couple of years, it's almost $28 million. They're able to do this through a special part of their business called Medallion Capital.
So what is that? Well, it operates as a small business investment company, or an SBIC. Basically, this structure lets them use government-backed leverage to invest in small businesses for the long haul. The key here is they're not just lending money. They can actually take ownership stakes, and that's how they can land these really big, profitable wins later on.
Okay, so we've seen high growth, high yields, but any smart investor knows what the next question has to be. What about the risk? You know, with a net interest margin over 8%, you have to wonder if they're taking on too much bad credit. So let's pull back the curtain and look at how their loans are actually performing.
And what we see here is really a tale of two portfolios. On one hand, you have the home improvement loans, and they look squeaky clean. I mean, delinquencies are super low. But then you look at the recreation portfolio, and things are a little bit different. Delinquencies are ticking up, and you can see they're putting aside more money, a 5% allowance, just in case. So what's the deal? Well, management has an explanation.
And here it is, right from the horse's mouth. What they're saying on the call is, hey, that uptick you're seeing, that's coming from our older loans, the ones we made before we got a lot stricter with our lending standards. They're making it really clear that the new loans they're writing today are performing much, much better. So the key takeaway, they see the issue and they're actively managing it.
And speaking of managing risk, this number right here is huge. Remember the whole taxi medallion saga? That used to be the biggest risk hanging over this company. Well, today, those loans are less than 0.3% of their assets. It's practically nothing. They have officially put that chapter behind them and cleaned up the balance sheet in a massive way.
So let's put it all together. You've got a huge earnings beat, a powerful new growth engine that's firing on all cylinders, and what looks like a solid grip on the risks. So what does it all mean? Where do we go from here?
Let's get into the analyst's take.
For me, there are 4 big things I'm watching. Number 1, that strategic partner channel. Can it keep up this incredible pace? Number 2, the recreation loans. Are we going to see those credit trends start to improve like management expects? 3, that commercial portfolio. Is there another big equity gain waiting in the wings? And finally, number 4, are they going to keep returning cash to shareholders through dividends and buybacks? These are the questions that will drive the story next quarter.
So, when you weigh everything, I'm putting an outperform rating on the stock. Why? Because they've got multiple ways to grow now, and they seem to be executing their plan really well. Yes, credit is normalizing a bit, but I think their strategic execution more than makes up for it. The big question for me now is, does the market really get how powerful these new growth drivers are? And as always, remember, this is not financial advice.